Hi traders, a very good evening. The date today is 6th of March 2023, and in this video I am going to do a detailed analysis of Nifty 50 price action for today. So let's get started. So let's start with the daily chart. So traders, in the daily chart we can see that Nifty opened with a gap up today. So Nifty opened at this level here and then went up. It sustained the gap up, and then there was some rejection and the price is closing at around this level, 17,711. So this sums up the price action for today. So if you see the yesterday's price action, yesterday there was a major short covering in the market. It was a big green daily candle, and even today the momentum continued. Market opened with a gap up, the price went up, faced some rejection, and then came again to the downside, and in the end it gave a green closing. So let's switch to the 5-minute chart. So traders, in my chart, you can see that I have marked the highs and lows of previous 3 days as my support and resistance. So this was the high of yesterday, which I marked on this chart, 17,642. So uh, it's 44, 45 actually, but 1, 2, 3 points, it doesn't matter. Uh, it's basically a zone. So the highs and lows of in the previous days act as major support and resistances. So today what happened was that price opened gap up of this resistance zone. So whenever price breaks a resistance zone, it becomes a support. So so price, so this is our zone. So price opened with a gap up. Now this resistance has turned into a support. So whenever price breaks a resistance, that resistance turns into the support. So whenever price gives a breakout of a resistance, then either two things can happen. So either price may, like the market opened here, the price may come down for the retest, or the price might not come down, but instead it can continue its upward momentum. So today this second case happened. So traders, how do we trade these kind of markets? So this kind of price action. So the simplest way to trade this kind of price action is that we switch to the 5-minute chart. This is the 5-minute chart, and we wait for the first 5 minutes candle and see how it is. So in this case, this first 5 minutes candle, so this candle, we can see that the price opened here, it tried to go down, but we can see this wick here, which means the price was rejected from the lower levels and the price went up and it closed at around its high. So it's a big momentum candle, it's a green candle, it's a bullish candle with momentum. The size is good size. So and the closing is at around its high, so it is a decent closing. So whenever this kind of uh, price action develops, that the market has breached the previous day high and opened with a gap up, and the 5 minutes candle, first 5 minutes candle, is a momentum bullish candle and it has closed at its high, then one should not think at all, and as soon as this candle closes, one should enter. So here an ideal entry was at this 920 candle, and what will be the stop loss? The stop loss will be around the low of the first 5 minutes candle. So this type of setup is also known as ORB, open range breakout. So in this kind of setups, what we do is that, so we can mark the high and the low of the first 5 minutes candle, and whenever any one of them is breached, we enter, and the stop loss will be the low of the first 5 minutes candle if you enter on the upside, and the high of the first 5 minutes candle if you enter on the downside. So here we can see the first 5 minute candle is a green bullish candle, and our entry would have been here. So in the options, this kind of prices, one can easily get 30 plus points in these kind of setups. You know. and once when someone is in profit, he can clearly stop loss to the cost. So if somebody had entered here, then there were enough chances for exit. One could have exited at around here, anywhere. Because the price spent a lot of time on the upside. So and then again, what happened was in the second half, the price got rejected from this level here, 17,800. And a kind of price action formed, which you can see by this trend line. So price was forming a series of lower highs. This is our high, lower high, lower high. So with this price action, what the price was trying to tell is that it is not sustaining on the upside now, and it might go down. So this is how the price action forming at that time was telling, because it was forming a series of lower highs, and we can see it was forming a series of lower lows too. So an entry on the second half would have been, if somebody has had seen this zone here. So this zone was acting as a support zone. So as soon as if if somebody wanted to enter early, he could have entered at the closing of this candle. So it was a strong red momentum candle directly breaking into this zone, and there were high chances that the market will break this zone, because the price is forming a series of low highs, and this zone has been one, two, third, fourth time. This candle was going to test this zone. So the more times support or resistance zone is tested, the weaker it becomes. Or else one could have waited for this breakdown to happen, and at this retest here, when the price at this level here, after this breakdown at the retest, the price, the person, the trader could have entered, the stop loss could have been around this level here, the high of this candle, and he would have got a good target. So yeah, traders, this is how the intraday price action today look like in Nifty. So tomorrow, let's see how the market opens up. So okay, traders, I'm closing the video for now. So hope you had a great day, traders. So thanks for watching. Bye.